All right, so one more minute and then we'll get started. All right, so I think we can go ahead and get started. There might be a few more people to hop on, but I'm going to get right into it. Last week was just a tough week. The Fed spoke. They brought up the word taper again, and they believe that in the next 30 to 60 days, they are going to start tapering. They're going to announce on November 1st. They're going to announce if they will start the tapering in December. So they believe that all of the pieces are in place in regards to the economic recovery for the Feds to back off on their purchase of treasuries and mortgage-backed securities. So in a nutshell, what that did is it means that there's going to be less buyers of mortgage-backed securities in the future. The more people are buying mortgage-backed securities, the lower rates will be. So if the biggest buyer of mortgage-backed securities backs out of the market, the open markets are going to have to rely on private investors to step up the game to buy these mortgage-backed securities and keep these rates low. So I'm going to share my screen to show you kind of what happened last week and why it's incredibly important to have a good lender to connect with, especially in volatile times. So hold on one second while I share my screen. All right, so let's go to put this over here. We have a couple different screens I'm going to show you here, but here's what's going on with the mortgage-backed securities in the last 3 to 5 days. We see this ginormous, what they call a pepperoni on the candlestick charts, this huge red drop right here. That's a bad day. That's an understatement. So this last week, we went below these moving averages. We pierced below them. And then on Tuesday or on Monday or so of the week, we dropped below this Fibonacci level, and then we bounced above it, and we thought, whew, we got out scot-free. But then when the Fed spoke, we had just a waterfall happen in the mortgage-backed securities world. So on this day, we lost 70 basis points. What that means is, see that little triangle right there? This little guy right here? That's an alert to lock. And then this is another one the day before. Most of our loans were locked right up here. If I wasn't here by 9 o'clock in the morning, if I wasn't here by 6 o'clock in the morning and I strolled in at 9, we would have had pricing down here and we would have lost a lot of the quotes that we had sent out. We would have been invalid. So we were able to lock in our loans all right here. But the reason for this huge downturn was the Fed's announcement, basically, that everything's set up properly for us to start tapering. So tapering, again, means they're not going to be buying as many mortgage-backed securities. And we saw a huge drop. And then we started out positive the next day and then went lower and then ended up kind of back up here, if you can kind of see that. And then today we dropped and then we went below this Fibonacci level, which was scary. And then we bounced off of it. So I'm hoping to stay above this so rates can stay secure. But this is what happened today. Let's see if I can show you what the markets have done today, because we've already had 2 price changes for the worst. So we had one earlier right here, price change for the worst, and then again at 6:38 a.m. price for the worst, and then we got a little bit better, and then we got pricing for the better. So if you look at the alerts we get from our secondary marketing department, our lock desk, we've already had 2 changes to our rate sheet, and it's only 9 a.m. So if you can imagine us quoting a rate here, and then here, and then here, when the markets are moving, Sorry, I'm not showing you the right screen. This is today. So we had here, we were down 15 basis points, and then we were down 33 basis points, and then we were down 5 basis points, and then now we're down 14 basis points. So anytime there's a move of more than 15 basis points, we have a rate change. So today we've had 1, 2, 3, potentially 4 rate changes already, and it's 9 a.m. So yes, it's volatile. It's kind of crazy. We hope that they will stay a little steady. So locking loans and knowing when to lock loans is incredibly important in this volatile market. It's very important. So if you quote a rate one day, it's going to be totally different the next day in a market like this. So locking and knowing when to lock is absolutely crucial. So I'm going to move this out of the way. Now this week, here's the economic calendar, so you kind of know what's happening today. We have durable goods, which came out today, which is actually better than expected. And again, good news is bad for interest rates.
Oh, that's good.
So those durable goods caused a little bit of a good news. So make sure you guys make sure you're muted. That becomes
Hold on, let me turn this down.
All right, well, folks, I got to get back to my meeting.
And I think you can mute people.
There we go.
There you go.
All right, so what's coming out today, we have a 2-year treasury auction that happened already at 8:30 that didn't come in very well. So that's bad. And then a 5-year treasury auction. So we're going to really watch these things. But this week, jobless claims on Thursday. We have the Feds talking again on Wednesday. We've got consumer confidence coming out on Tuesday. And we have inflation numbers coming out, the personal consumption expenditures on Friday. So it's going to be a very busy week, which means a lot of volatility. So that's kind of what's happening with interest rates. Let's look to kind of see what the national average is real fast. Let's go back here. Where am I here? Mortgage News Daily. And Mortgage News Daily, a great place to go to kind of see what's happening with the mortgage world. Right now, the average 30-year fixed has leapt from the 2s into the low 3s now. So last week, we lost a quarter in interest rate. So 3.13 is the national average. This is today's markets. Anything in red is bad. So that means rates are going to creep up a little bit more than that based on the current markets. So we're still really good, guys. I mean, 2 years ago, anything below 4 was the craziest, the lowest rate we've ever seen. So we're in good position still, but we need to make sure that we're positioning ourselves to lock properly. And so that's kind of where we're at. Still very, very good. So nothing to complain about, just the trend is higher. So locking in early last week or just watching the markets now to lock appropriately before the Feds spook the markets again is going to be an important piece of the puzzle. All right, so let's jump in a little bit to our topic for the day. The most important piece that we have as a lender is to make sure people are properly prepared for buying. So I'm going to go over a checklist that I've created on how to really prepare your buyers for the mortgage process and to buy a house. But before that, I want to just open it up to any questions. So I'm going to stop sharing right now for a second. Any questions out there in regards to what's happening to interest rates and what to look out for in the next couple days? Somebody's driving from Havasu. Very cool. Chris, that's Christine?
You explained it well. Thank you.
Okay, wonderful. So we're going to be very careful this week as we watch rates. And then now as we move forward, I'm going to put this document in the chat so you guys can have it, so you can download it. So I'm going to do that in just a second. But this is the ultimate checklist to get you guys to get your buyers purchase ready. So I'm going to share my screen so you can see the whole thing as I go through it. I'm going to put this on the main screen. Let's put this group over here. Sorry, as I go through this. All right. So this is a little breakdown that I put together, and I'll send it to you. But when we talk to buyers, first off, I actually have a program that's through this calendar thing called Calendly, say that 10 times fast, where anyone can sign up for a buyer's preparation course. So if you have any buyers that are looking to sign up, I'm happy to do a 30-minute to an hour buyer's prep course over the phone, via Zoom, anyone that's looking to buy in the next year or so can be part of this little consultation. So basically, this is what I'll go over. The first and foremost is budget. We want to make sure what their maximum payment what they want it to be and to make sure that actually matches the home prices that they're looking at. I would say it's about 50-50. Those people that when I ask, what's the price of home that you're currently interested in? And then what's their budget? About 50% of them actually match. 9 times out of 10, it's if they don't match, their eyes are much bigger than their stomach. So we want to make sure that when they're shopping for homes, it is within their monthly budget. Also, when you're looking at different things with condos, make sure that HOA, when you're looking, if it has an HOA and it's really large, make sure you see what that covers, because it may be a good deal if it covers cable, trash, water, all the other things that potentially could be part of the HOA. So make sure that's built into the budget as well. And then what is their maximum out of pocket that they can afford? A lot of times people say, well, how much can you put for down payment? And they have no clue what the down payment requirement or what the closing cost would be on top of that down payment requirement. So we go over the maximum out of pocket. What do you have available for you right now, and where is it coming from? And then qualifying is the number one biggest component that I want to make sure we go over with customers. And just as a rule of thumb, I'll put together a little formula for you. The formula for qualifying: your mortgage PITI, so all of the cost of the mortgage, including taxes, insurance, HOA, mortgage insurance, everything, plus your minimum payments on all of your monthly debt. And only borrowed money counts here. So any credit cards, auto loans, borrowed money like student loans, etc. The minimum payments on all that, add up all of that. And on a jumbo loan, it can't exceed 43% of your total income. Conventional can't exceed 50% of your total income. And FHA is 55%. Now, when I say income, if you're W-2, we go off of what your total income is before taxes. If you're self-employed, it's after all write-offs. So to kind of give a ballpark of what people can afford, this formula is pretty good at figuring out about the budget that you can have as far as your maximum. Now, in regards to employment, when somebody comes to me and say, what do I need to do to prepare for buying? We need to show some sort of employment history of 2 years. Now, salaried borrowers and self-employment borrowers, two different, very, very different here. So let's go over salary real fast. We can actually use a salary that's coming up with an offer immediately. So all we have to do is show that they're working before they go and make their first payment. So whenever the first payment is due, we need to show they're in the job before that. So we can use an offer letter if it's a salary to get them into a new home and use that to qualify. If they're right out of college, we can actually use their transcripts from college as employment history. So you can literally have someone right out of college, has a job offer, and they can buy a house even if they're not actually working at that job yet. Hourly jobs are a little different. We need to show that they're either working currently or they have a verification of employment that shows what their hours are, a pay stub, a first pay stub, or an offer letter with a guarantee of what their income is going to be as a minimum per week. So good information to have right here as far as how you're going to qualify. Self-employed always requires 2 years history of self-employment. And this is for all traditional mortgages. Jumbo, conventional, FHA, VA, we need to show 2 years worth of sustainable income. And the reason is we need to prove that the company that you own, that you control, is sustainable. We need to show that that income for that company is going to continue. The statistics on jobs or on companies surviving their first 2 years of business is very low, and that's part of the reason. And then also, I'll get into what's needed here, but we need to prove that it's going to continue to be successful. So a year-to-date profit and loss statement, stuff like that. So 2-year history is needed. So when somebody comes to me and say, what does my history need? We'll go over this in detail, make sure there is 2 years worth of history. Now, I think the biggest frustration with getting a loan approved during the process is making sure the money is readily available. So we need to make sure they have that money. We need to know where it's coming from, and it's from a source that is usable. So expectations, we need to make sure they know what is needed plus closing costs. All funds must be accounted for and in personal accounts only. Business accounts can be used. Right here, business funds can sometimes be used, but we require a proof that these funds won't hinder your business. And that has to be done by a CPA. And sometimes CPAs can be reluctant to write a letter such as this. So business funds, they can be a little tricky if business funds are used. So if somebody has all their money coming from business fund, they can transfer that into their current account, let it sit there for 2 months, and then they'll be fine, nothing's needed. Then all non-income related funds must be accounted for 60 days. So if you just sold a Babe Ruth baseball card for cash and you didn't have a bill of sale signed and you deposited $15,000 into your account and you can't prove where it came from, you can't use that money. But if it's there for 60 days and you have 2 bank statement cycles, you can use it. So making sure people understand where the money is, how it can be used is incredibly beneficial because that's probably the biggest pain point for a lot of first-time home buyers is tracing the funds. Untraceable funds cannot be used for real estate transactions, unless of course they've been there more than 60 days, which to me is kind of silly because if I was trying to commit some sort of a money laundering scheme, I would just put the money in there and wait 60 days and then I'm fine. So crooks will always find a way. It just kind of really hurts those people that are doing it right. But gift funds can always be used and they should always be wired. So I coach them on not to intermingle those funds up front because then more bank documentation would be needed from the donor. But if it's wired, all you need is a letter and a wire receipt. So a lot easier to do it that way. If funds come from the sale of an item, need a bill of sale and save as much money as possible. Cash is king. Always make sure people don't just start paying off debt. The last thing you need to do is pay off something that you don't need to have paid off. And I'll show you an example of that right now. So I'm going to show you this. This is really very, very useful. If I can find out which tab it's in. This is an example of credit of what happens if you pay everything off to 0. So this particular case, you can see right here, they have a 618 credit score. They have 2 credit cards that are at 0 balance. If they would have just paid that down to a $20 balance, they go from a 618 to a 632 and now they qualify. So this is just a good example of how paying off credit cards is not always the best solution. So I just want to kind of show you how that works. That's a credit analyzer that I use to kind of show what we can do to boost people's credit scores. So let me go back to our breakdown here. So just save as much money. Do not pay off anything. I can coach you on what to pay off to maximize your credit scores. Cash is king. Keep as much money in the bank as you possibly can in preparation for purchasing a home. Do not pay off anything. Just save up cash and we'll figure out what to pay off to qualify. Know how much total money you can afford. That's obviously key. Bank statements that have insufficient funds or overdrafts. That's a problem. So if you have somebody that has the money, but their account is riddled with overdrafts and insufficient fund messages, that can be a problem. So we need to make sure we're going over that. Now, credit preparation, I went over just now how I do the updated credit reports or credit scores by just manipulating what their balances are on credit items. These are just a few of the minimums. 620 conventional, FHA doesn't have any. Jumbo, you need a 680 plus. Down payment all the way down to 600. When I tell people what to keep their credit at, if they want to monitor themselves, just make sure it's not more than 30% of what they can borrow on that credit limit, and that'll keep their credit scores optimized. I tell them to make sure they pay all their bills on time. A lot of this stuff is kind of silly, but sometimes people will let everything else go late and they'll keep their rent strong and keep the rent on time because they think that's the most important thing. I've seen it a lot. So you just need to keep everything on time and do everything you can to try to do so. We have to remove all disputes. There can't be any disputes on credit reports that are your own. So that's very important. I tell them to avoid pulling credit unless I tell them to do so, or in getting any new lines of credit. And then late student loans are kryptonite. If there's any lates on any government-backed loan, it's kryptonite. It's unbelievably how much of an impact that has on credit score and your ability to get a mortgage. And then here we go, ways to reboost your scores. So always do the credit analyzer for your customers. I do it on every loan because you never know how much we can get their credit scores up. If we have somebody at 680, I might be able to get them to a 740 and get a much better much better interest rate, cheaper mortgage insurance, better overall everything. Another way of boosting it that a lot of people don't know is if they have their family members add them as an authorized user, you immediately adopt all of that history. Make sure it's a good account, because if it's a bad account, you're going to adopt that bad history and your credit score will go down. This is a link. Again, I'm going to share this with everyone. This is a link right here where people can go to this person, Kelly, and actually have their rents posted on their credit report for up to the last 24 months to help boost their credit scores as well. Any charge-offs, payoff, any IRS liens have to be paid off. These are all ways to just boost your credit, other than the customized way that I do myself. And then things to avoid, I always go over this. A lot of this might sound very simple and kind of like a duh, but it's not for a lot of people. So do not get any new credit or pull your credit multiple times. On the mortgage, you have a 2-week window to run your credit score as many times as you want, and it will only affect your credit as one inquiry. So that's important. But any other credit items like cars, credit cards, Home Depot cards, anything like that will have an impact on your credit report. Don't pay off any debts. Do not change jobs without asking me first. Do not finance anything without consulting me first. Let's go back to that jobs. If somebody's W-2'd for 19 years and they change to a 1099 employee at the same company, guess what? We now need to show 2 years tax returns to qualify, just because they switched to a 1099 employee. So that person who could have qualified now can't buy a home for 2 years unless they do an alternative documentation loan, like a bank statement program or a no-doc loan, etc. So that's very important. Do not change your jobs. Don't co-sign for anything. Don't go on forbearance on anything. Again, don't change employment. I had that redundantly there. A little bit of an explanation point behind that, really. Don't get married or divorced without letting me know first. Believe me, this has happened to me at the closing table before, and it's made the whole thing go kind of sideways from somebody that eloped, and it happens. So do not change bank accounts or move money around. It's just a pain to track everything down. Do not make any cash deposits. Don't consolidate credit cards. Do not ever overuse your credit cards, so to speak. And that's like maxing them out to buy things during the transaction. And do not quit your job again. It's very important. So now I'm going to go over the documents needed. It's important for people to know what is coming up and what they're going to be needing to satisfy the mortgage requirements. A lot of people think it's like opening up a checking account where you walk in, you sign something, and then in 30 days, voila, they've got $500,000. Unfortunately, that's not the case. So this is a breakdown for you of what's needed. Now, self-employed borrowers are much different than W-2. 2 years federal tax returns, all pages. If you have an S corp, we need all of the business tax returns. If you're partnerships, we need the K-1s. Now, this is a part where this got added. Typically, this is only needed if you're well into the year, but with COVID, there's been some changes, and there's probably going to change back, but a year-to-date profit and loss to show where your business is currently at this moment, how it's performing, has been very important during COVID with all of the lockdowns and all the businesses being hurt. That's probably the most difficult piece for people to get right now, because they have to go into QuickBooks, they have to create it, they have to send it in to me. And it's just something that is not normal, but it is an important piece. And if you're licensed, or if your business requires a license, we need a copy of that. Now, if you're W-2'd, we just need your W-2s, your most recent pay stubs, and student transcripts if you were a student before. You don't need tax returns at all unless you own multiple investment properties when you're a W-2'd employee. So it's really a lot easier. If you're retired, your tax returns will show us if the Social Security or if the retirement income is taxed or not, and we can gross it up 125% if we use tax returns to do that. Otherwise, we would need awards letters for Social Security and pensions, or the IRA or annuity statements for your asset distribution. Pretty straightforward there. That's basically all of the income documents you would need. And then there's some variations down here. We'll go over a little bit, but 2 months bank statements, all pages are going to be needed for all accounts being used. You can't say, here's $100,000 in this account and give me those bank statements and then use an account that is completely different. It just doesn't work that way. You have to use the exact accounts that we verify. So all of this going over with the borrowers so they can prepare is very important. Quarterly statements for any stock or investment accounts, and then document any large cash deposits. Now, if you own multiple properties, a lot is needed. And if there's about 10 properties or more that you own, it can get out of hand. But mortgage statements, insurance statements, lease agreements, HOA statements, all of that is needed. If you own these multiple properties for a long time, the tax returns will give us everything we need. But if you just purchase some properties and those are not showing on your tax returns, we're going to need the new lease agreements. And then some miscellaneous items, your VA DD 214 if you're a veteran, your driver's license or passport, divorce decree if divorced, fourth grade report card. I always throw that in for a little bit of humor. And if you are a remote worker, a HR letter stating that you can work remotely. This is a pretty comprehensive list. I'm going to give this to everyone. I'm going to put it in the chat here real fast. I'm going to upload that. And then I'm going to open up to questions. But again, these little meetings to go over everything that we have here is incredibly important to help you guys have a successful closing. And whether it's done over the phone, Zoom, in person, it's important to do. So I'm going to actually upload this right now. So let's see if I can do that. I may have to do a new chat due to all. Any questions on anything and how to prepare on this little checklist? Was it?
This is why we have you. So you
Yeah.
can go over this with our client because we
Exactly.
have enough things to go over with our clients.
There's a lot here.
Yeah.
And the reason I want to show this is to let you know what we go over, because a lot of times when I have this conversation, the consumer will come back to you and say, you know, I don't really like that lender. They're asking me for a lot more than my other lender asked for. And I see that all the time. And a lot of the reasons is the lenders don't want to scare the borrowers away. So they'll just make everything sound warm and fuzzy and easy and simple up front, like click here, get loan, right? And that's not the case. So I want to make sure that you understand what is needed, because it is a lot, and what we can do to help prepare. So if you have any buyers that need to prepare ahead of time, or if you want to send something out, like, are you looking to buy in the next year or so? Click here, and I'll give you guys the link. Click here to set up an appointment with my lender that I trust to go over what might be needed. So let me put that link in here real fast. Hold on one second. New. Control. Open. Copy. Hide. All right, this is the link to my Calendly, where you can set up any appointment with me at any time. It goes direct into my calendar. It's a pretty cool little program. And then here is let's see if I can do this from my own account here. Google Drive. I'll have to save this. Hold on while I do this real fast. File, save as, OneDrive. I'm gonna have to send you guys the breakdown of the list, but we've got a list of everyone in here, so I'll go ahead and do that separately. It looks like they took off the attachment, and now you have to download it from an outside third-party web source. So sorry, can't do that right now, but I will send it to you. Any questions for me as you kind of read over all of this? Because it really is important that I think every one of you know what goes into the pre-qualification process to prepare somebody to buy. All of that information on there, if we have somebody that is looking at homes without getting pre-qualified, any one of those items can make the whole thing blow up. So trying to do it in a 2 to 3 hour window on a weekend is doable, but it's not always optimal. So before anyone gets in your car, let's make sure they're properly prepared, make sure they're going through all of the necessary steps to ensure that every aspect of what they need for the transaction is set up properly. Obviously, if they're a cash buyer, it's a lot easier. But if they're requiring a mortgage, this is important. For people that have never bought a house, I think this is the most important. A lot of people that have already been through the process, it's pretty straightforward. Any questions? You're welcome, Joni. If you want to stay on, I'm going to try to save this to my Google Drive real fast and then share that link